You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning, traders. This is your Options News Rundown for Monday, April 9th. Our first story today is from CNBC. President Donald Trump's concerns about the trade war with China are fair, but his approach may not be, according to former U.S. Trade Representative Michael Froman in an interview this morning on CNBC. Quote, "We ought to stipulate that concerns that the Trump administration raised about China are real and legitimate." Froman, who was former President Barack Obama's principal advisor, negotiator, and spokesman, said on international trade and investment issues, "I think the question is whether the Trump administration is approaching it in a way that's most likely to achieve success," he said this morning in his Squawk Box interview. In a tweet early this morning, Trump called out China again for what he has called unfair trade practices by the world's second largest economy. The president unveiled a list of Chinese imports last week that his administration aims to target as part of its crackdown on China. Shortly after the announcement, China announced additional plans for tariffs against the United States. China's foreign ministry blamed the U.S. on Monday for trade friction and said it was impossible for negotiations to take place under current conditions. Next up is a story from MarketWatch. Dow futures are poised to rebound modestly this morning as traders try to dispel persistent concerns about global trade clash between the U.S. and China. Gains for U.S. stock futures come after an ugly sell-off on Friday. Upbeat comments from Trump and his administration on China helped lift the sentiment, which has been battered back and forth by recent tit-for-tat trade hostilities between the two biggest economies. What are the main benchmarks doing? So far this morning, Dow futures rose 147 points, or 0.6%, to 2473, while S&P 500 futures rose 18.8 points, or 0.7%, to 2624.50. NASDAQ 100 futures gained 42.25 points, or 0.7%, to 6497.25. Trade war concerns triggered sharp losses for stocks on Friday. The Dow Jones Industrial Average slumped 572 points, or 2.3%, to end at 23,932.76. On Friday, the S&P 500 index dropped 2.2%, NASDAQ slid 2.3%, for respective weekly losses of 1.4% and 2.1%. Optimism rose over the weekend as the president alluded to hopes an agreement could be reached between the two nations on China. Quote, "China will take down its trade barriers because it's the right thing to do. Taxes will become reciprocal and a deal will be made on intellectual property," he wrote in a tweet. Our last story today is from Bloomberg. Forward curve of a closely watched proxy for the Fed Reserve's policy has slightly inverted, signaling investors are either pricing in a mistake from central bankers or end-of-cycle dynamics, according to JP Morgan Chase. The inversion of the one-month U.S. overnight index swap rate implies some expectation of a lower Fed policy rate after the first quarter of 2020, the bank's strategists wrote in a note on Friday. Quote, an inversion at the front end of the U.S. curve is a significant market development, not least because it occurs rather rarely, they said. It is also generally perceived as a bad omen for risky markets. The negative market signal comes as investors grapple with higher short-term borrowing costs, which have risen in the U.S. to levels unseen since the financial crisis. While the strategists admit it is difficult to discern which of the two explanations for the yield curve inversion carries more weight, flow data suggests it is more likely to be rising expectations of a Fed policy mistake. That's all we have for today. You can find all of these stories and more on theoptionsinsider.com. I'll be back tomorrow with more options news you can use.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.